get into too much detail here. The Dow was down 37%. In general, we were down about 17. So that was the first kind of amazing thing that happened from the portfolios is the market was down twice as deep as the stocks that we owned. And that's because we bought them on sale.
Mm-hmm.
There wasn't
Mm-hmm.
very far for them to go, right? Plus we had a cash cushion that wasn't going down at all. All right, so those two things were great.
Because let's talk about that a little more, because if you don't buy it on sale, what that means is you bought it at what would we call that? Full price? High price?
Yeah, full price. Yeah, very high price usually.
Expecting that it will continue to go up as the company makes money. The price will basically grow, but always kind of at a commensurately high price.
Right.
Which is, I think, a lot of people are thinking these days, and I get it. But when the market then has a drop like that, and all of a sudden prices are more on the average level and may continue to be commensurately average going forward, you got to wait that out a decent amount of time probably to get back to just to where you were.
And this is the tough part about advice to diversify and just hold. Is it's very hard for most people to hold on to something that's dropping, let's say down 50% in a typical market drop, and feel fine about it because they don't know what the thing was worth in the first place. So if you bought Boeing, let's say at $460 a share, on the advice of your financial advisor who's saying that he's an efficient market theory person who thinks that all prices and values are correct, that price is value. So you bought it at $460, full of confidence that price is value, everything is good. And then Boeing started going through all of these problems, right? The Boeing 737 MAX, and just about the time it starts to look like maybe that's going to recover and the stock starts to come up a bit, then it gets hit by COVID and the airline shut down. And you're sitting there wondering, have I made some terrible mistake with my portfolio? And this is why people don't buy a lot of a stock, because they don't have confidence in their ability to decide, this is super cheap.
Yeah.
Right? Whole different ballpark. So now you bought it at 460 and the stock is at 100. How are you feeling about that?
Feel like
you're feeling probably scared. Like, why wouldn't this go bankrupt next?
Totally.
Right? And now Boeing's taking on $50 million of debt. I mean, you don't know what's going on. You have no sense of it. And so it's got to be really scary.
I mean, like, just because somebody bought it $450 doesn't mean that was the wrong price to buy it at. Maybe that's a great price. So,
well, okay.
I don't follow Boeing at all. I have no clue. So if the point is, it has to be a price that the buyer understands and knows why that's a reasonable price and why the price should grow over the next 10 years.
But even if you do understand it, you have to have a margin of safety. This is the three most important words of investing.
Good point.
Is, okay, great, you understand it, but great, you're also human.
Yeah.
Also, there are things that happen that you don't possibly imagine.
Exactly. Crazy things happen.
Right? And so that margin of safety is what protects it. So for example, just again, to make the point, when the stock is at 460, we weren't even thinking of owning it. We look at it and it's way, way up there in terms of its price versus intrinsic value. We feel it's fully valued, and not crazy value, but fully valued. And then this 737 MAX problems start to happen and the stock price drops down toward 200. Okay. So it gets almost cut in half.
Mm-hmm.
And that's when we started moving on it by selling, basically selling other people insurance that we'll buy their stock from them at a price we want to pay. So the stock price hadn't gone down as far as we were ready to buy it, but it went down far enough that we could say, go into the market and offer insurance. Let's say we're willing to buy it at $200 a share and the stock's at $250, $260. We can offer insurance to people and say, we will be happy to buy this from you, this many shares for this long of a period of time at $200 a share. You'll pay us an insurance policy. And people were so scared for 1 year of insurance to have the assurity that they could sell that stock at $200 a share. They were paying us $60 ballpark. I might be off a little bit, but I'm pretty close. About $60. In other words, by doing that, if my risk is $200, I'm making $60. That's 30% in a year. All right. Well, that's something I'm interested in doing. I will do that all day. And I don't know if we did it exactly 200. I think it was at 220. Anyway, you get the general idea, right, Danielle?
Yeah.
Is that you're selling I sold people the right to force me to buy their stock at 200 when I'm sitting there hoping I get a chance to buy it at 200.
Mm-hmm.
And then the stock goes through 200 like, just hot knife through butter all the way down to 100 when COVID hits.
Mm.
And now we can sell insurance at 60 or at 100 or whatever. We can be assured that we can buy positions in this company and get a huge return at the same time. Anyway, I don't want to get all into that, but there are really great things to do as a company starts to go on sale. And the most important great thing to do is to buy it aggressively when it goes on sale. And in order to do that with confidence, you have to know the value of the business.
Oh, yeah. But you also have to have money, which was kind of the problem for a lot of people.
Okay,
during
look,
that
put it
drop.
like this. I agree. You have to have money. Now, let's say the house across the street sells for typically $460,000. Let's say it's a townhome and they sell for $460,000 per townhome. Okay.
Okay.
And all of a sudden there's this massive meltdown in real estate.
Mm-hmm.
This actually happened to my mother-in-law. So I know $460,000 to $500,000 for a townhome. All these things are identical. And a year later, they sell for $200,000 in foreclosure.
Okay.
Would you find the money? Would you be motivated somehow to get your hands on one of those things if you knew that was happening and you knew the value, you knew that they rented for a 10 cap at $460,000. That was the 10 cap price.
Mm-hmm.
All right?
Yeah, I get it. Yeah.
In other words, the yield on a $200,000 purchase would be about 20% a year. Would you do everything you could, if you understood what I just said, would you do everything you could to buy that townhome?
I don't know. Probably not.
Oh,
Probably not.
jeez. Oh,
Because I'm not going to do
You
everything
serious?
I can to come up with some kind of janky deal. No.
janky deal.
Yeah, I
What
don't know.
is
What
janky
is
about
would
that?
you do everything you could? It's so dramatic. I don't know. Maybe do like
sometimes.
3 things.
3 things. Well, I'll tell you what, if you didn't do everything you could do later on, like as in a year later or 2 years later or today, 10 years later, when those things are selling now for $1 million, you'd be very upset with yourself. You'd be sitting
You
there
realize
going,
that I'm like a human in this world who lived through the financial crisis and all of real estate dropping like that. So yes, I have been there. I have been through this. I did not do anything that I could. So I'm fully aware. I mean, this is not like
When did you
this
start
is not
learning?
like an imaginary
But when did you start
situation.
learning about
I think
investing?
every single person has been in that situation.
Come on, when did you start learning about investing? What
6
year?
of 2015.
There you go. So you did not understand yet that you want to be able to be ready to buy things when they go on sale. So you didn't understand that yet.
So there's
So
my
of course
excuse.
you didn't do anything.
Perfect.
But now you understand, and you're acting like you don't. What is it about this that you don't understand? I mean, I'm sitting here thinking, if that happened again, that would be one of the great investment moments. Because you know people
totally.
have to rent things,
Yeah. I don't know what I would do, Dad.
and there's
I mean,
money out there to
Yeah.
loan to you. You don't have to have $200,000. You can
Yeah,
borrow some
maybe
money.
it would totally work out. I would probably do like 3 things. Yeah.
Okay.
This
Well,
is who I am. And
That's where we're different.
yeah, that's
I'm-
where we're different.
I am ready. I'm willing to pounce on the things I understand.
And how much did you pounce on at that time?
Gosh, okay, let's see. We loaded up the truck and I went on TV and said, we're
But that's
buying
not
everything we
that's
can.
not doing everything you can when you have no money to like buy a townhouse.
I had money.
You had money. That's my point. But you bought it on your computer.
You guys, if you enjoyed this video and you feel it was valuable in teaching you more about how to invest, hit the like button and please share the video with your friends. And if you want more investing content, subscribe to my channel. And don't forget to click the button on the screen. We got a free gift for you. Thanks again for watching.